As we welcome you to our 2022 annual member meeting, we'd like to express our gratitude to you, our large and diverse group of members, for the contribution you've made to the Australian community during this extraordinary period in our history. Thank you for the vital healthcare you've provided those most in need. Thank you for continuing to source our food and groceries. Thank you for building and operating our essential infrastructure and utilities. Thank you for providing accommodation. Thank you for educating us. Thank you for delivering the mail. Thank you for entertaining us. Thank you for keeping us connected. To all of our members and the thousands of large and small businesses you work for, thank you from all of us at AMP. And welcome to your 2022 members meeting.
Welcome to the annual meeting for members of AMP's superannuation funds. Thank you for joining. My name is Steve Vade. I'm AMP's Director of Client Services and will be your host for the meeting. Through our Customer Support Centre, my team and I interact with members on a daily basis, so I'm delighted to be hosting today's meeting. I would like to begin by paying my respects to an ancient protocol and cultural practice of the very first Australians. That is, to acknowledge the Gadigal people of the Eora Nation, who are the traditional custodians of the land where we are hosting this meeting from in Sydney. We acknowledge the elders of these lands, both past and present, and all First Nations peoples from the many lands from which our members join us today. We're holding today's meeting virtually from AMP's head office in Circular Quay and from our Melbourne office. We want to assure you we are taking all necessary COVID precautions to help the team remain safe and well. We have listened closely to the feedback from our members on our first meeting last year and also reviewed the questions many of you have taken the time to pre-submit ahead of today's meeting. Both have informed today's presentations. You'll be hearing from Tony Brain, the Chair of AMP's Superannuation Trustee Board, Anna Shelley, AMP's Chief Investment Officer, Elaine Anderson, Director of AMP's Super and Retirement Business, Edwina Maloney, Director of AMP's Platform Business, and Shane Oliver, AMP's Chief Economist. The presentations will cover our two funds, AMP's Superannuation and our Wealth, Personal Superannuation and Pension Fund. These represent our master trusts and our platform offers. Tony will provide some more context on this fund structure. We have pre-recorded this part of our presentation. However, this will be followed by a live question and answer session where the team, including Scott Hartley, Chief Executive of AMP's Australian Wealth Management business, will also join from our Brisbane office. If you wish to submit a question, you can use the Q&A function on the right-hand side of the webcast panel. For the phones, press *1, that's star, then the number 1 on your keypad and provide your question to the operator. The directors of the Trustee Board, Tony Brain, Catherine McDowell, Kerry Howard, Tricia Klinger, Paul Scully, Sarah Brennan and Andrew Byrne will also be participating in the meeting, along with our fund actuaries and our auditor, Ernst & Young, represented by John MacDonald. Additionally, in attendance, we have the Trustee Executive of the Superannuation Trustee Office, Sharon Swan, and the Chief Risk Officer of Superannuation, Retirement and Pensions, Julia Pryor. I'll now hand over to Tony Brain, Chair of the Trustee Board. Welcome, Tony.
Thank you, Steve, and welcome to you, our members. During my presentation, I'll provide you with an update on how we've progressed with the priorities we identified at last year's meeting, explain our fund structure, and how we've continued to revitalise the Trustee Board. But first, I would also like to pay my respects to and acknowledge the traditional custodians of the Wurundjeri people of the Kulin Nation, the land on which I am presenting from. This annual members meeting is your opportunity to hear from the Trustee and AMP Superannuation leadership team. At last year's annual meeting, I spoke with optimism, hopeful that the worst impacts of COVID was soon to be behind us, and that this year's meeting would be one where we are meeting in person. But given recent challenges posed by the Omicron variant, we have again decided to hold the meeting virtually. Our presentations are pre-recorded and our member Q&A will be in a live online forum. It goes without saying that it was another demanding 12 months for our communities. And on behalf of your trustee board and everyone at AMP, I would like again to express my sincerest gratitude to our members who have been working on the front line of COVID, particularly those in the health, retail and other essential service sectors. And with that in mind, and on behalf of the trustee, I would also like to thank the people at AMP who have continued to be there for you throughout this period. One of the trustees' priorities has been to see that AMP has been positioned to continue to service our members well through the appropriate support for AMP staff and their families, as many adjusted to new working and care arrangements for their dependents, be that school-aged children or older family members. Like many workplaces, AMP has evolved to be a much more flexible workplace, which will continue to provide benefits post the pandemic. This flexibility allowed the AMP staff, particularly our contact centre, education managers and advice teams, to continue to support you throughout this challenging period. At last year's members meeting, I highlighted 3 strategic priorities for the trustee. The first of those being enhanced investment returns, the second, the continued simplification of the range of products on offer through the AMP superannuation business, and the third being the passing on of the benefits of this simplified structure and resulting efficiencies to our members. I'm pleased to report that we've delivered on each of these priorities. And let me touch briefly on each of those. First, enhanced investment returns. Our investment team delivered an average return of 20% for members of our AMP MySuper Life Stages Fund for the financial year ending 30th of June 2021. The largest group of AMP MySuper members are in the MySuper 1970s group, which achieved returns of 21.6% during the year, having achieved 9% annual returns over the past 5 years after all fees and taxes. These are outstanding investment returns for our members. The second priority area is the completion of our simplification agenda has streamlined our product offering to 3 products, down from 11. And the third area, the efficiencies realised through the simplification program enabled us to pass on further fee reductions for our members. The combination of strong returns and lower fees will have a significantly positive impact on member retirement savings outcomes. And our Chief Investment Officer, Anna Shelley, will break down our investment returns in more detail for you, including key aspects of our go-forward investment strategy and our particular focus on responsible investment. And Shane Oliver, AMP's highly respected Chief Economist, will later provide you with an overview of what he believes are the long-term market drivers for investment performance. Shane's deep, long-held expertise with investment markets helps inform our investment strategy. And we want to give you a clear picture of what is driving this strategy, always mindful that superannuation is a long-term investment. Strong, sustainable long-term returns for members is one of our central priorities. As you may be aware, there are 2 separate superannuation funds that we are trustee for. Firstly, through the AMP Superannuation Fund, we partner with employers, advisors and members to offer a wide variety of features and benefits, including choice super options, access to workplace presentations and assistance, defined benefit capabilities, and our MySuper Life Stages solution. This fund is often referred to as the Master Trust. And Elaine Anderson will talk in more detail about what we're delivering for members of this fund. Our Wealth, Personal Superannuation and Pension Fund is home to our wrap investment products, with most members in an advised relationship. This fund is often referred to as the wrap platform. Members in this fund benefit from having a relationship with a financial advisor who helps you to manage and build retirement wealth. And Edwina Maloney will provide an overview of the priorities for our platform business, including the considerable enhancements we're making to North, our flagship platform. It's also important to note that the trustee is distinct to AMP. Our role is to oversee and hold AMP to account, ensuring all actions and decisions made in relation to your superannuation funds puts your best financial interest first. This is a responsibility we take extremely seriously. The Trustee Board continued to undergo renewal and expansion and remains particularly well equipped to oversee the management of your retirement savings, and I say thank you to all my fellow directors for their significant contributions over the period. During the 2021 calendar year, a further 2 new non-executive directors joined the board, Tricia Klinger and Andrew Byrne, and both have made an immediately positive impact. We also saw the retirement of 2 directors, Stephen Roberts and long-standing director Daryl Mackay. Daryl served our members for more than 8 years, and I say thank you to both Stephen and Daryl for their significant contribution, and particularly through the last 3 years of significant change. Tricia and Andrew join what I believe is an extremely well-credentialed, capable and independent board. And we had a busy year, meeting collectively 30 times over the financial year, overseeing this major program of change. But it's been very rewarding for all of us to see how these changes are materially benefiting members, including the activities and initiatives the team will now discuss. I will return at the end of the presentations to summarise our strategic priorities and future focus. And now hand over to Anna to discuss investment performance strategy in more detail. Anna is a highly respected and experienced Chief Investment Officer, joining AMP during the course of last year. Over to you, Anna.
Thank you, Tony, and welcome to all of our members. Firstly, we'll take a look at what drove the excellent returns for the year, particularly for our flagship 1970s MySuper Life Stages option, in which the largest number of our members are invested. I'll then provide an update on some of the key aspects of our long-term investment strategy for your funds. As we know, super is a long-term investment, and this is the primary lens through which we develop our investment strategy. Importantly, this strategy takes into account what we see as the key themes and drivers for investment markets over the next 20 years, which our Chief Economist Shane Oliver will discuss later on. COVID remains top of mind for all of us, and Shane will also provide an update on how he expects it might impact markets in the short to medium term. So let's have a look at what drove the particularly strong investment returns over the last financial year. This slide shows the asset class breakdown of our 1970s MySuper option. You can see that given this age group still has quite some time before they retire, there's a significantly higher weighting to growth assets such as shares and property. As Tony mentioned, our MySuper 1970s option delivered a return of 21.6% for the past financial year and 9% per annum over 5 years. These are outstanding outcomes for our members. The key reason for strong returns last year were growth assets such as global and Australian shares and Australian listed property, which saw spectacular increases during the year, following on from the softer returns due to the outbreak of COVID in the previous year. You can see this illustrated here. While concerns have renewed in recent months with the emergence of Omicron, global growth saw a strong recovery during the last financial year on the back of successful vaccine rollouts in many countries, as well as continued fiscal stimulus and monetary support from central banks. Global shares provided returns of 28%, with the US share market leading the way as it hit record highs towards the end of the period. In line with global shares, Australian shares rebounded strongly during the year, while Australian listed property went from being one of the worst performing asset classes in the prior year to being a standout performer. On the flip side, with concerns of rising interest rates, bonds performed poorly during the year. Our investment team did well to ensure strong exposure to these high growth assets. Even our members closer to retirement with more conservative portfolios still achieved returns in excess of 11.9%, a great outcome. While investment returns in the second half of 2021 came off as markets became more volatile, over the course of the calendar year, they still remained very strong, with 1-year returns to the end of December in excess of 15%, 3-year returns of 11.4% per annum, and 5-year returns of 8.4% per annum. Despite the expected near-term volatility, members invested in our MySuper Life Stages funds and nearing retirement should take comfort that your hard-earned nest eggs are invested in more defensive asset classes and therefore are more protected against market volatility. But for the majority of our members who still have many years before you retire, it's more important you take a long-term view with your super and stay the course. While past performance is not always an indicator of future performance, over the long term, returns in key growth assets such as shares and property are likely to be strong as they have been for the past 100 years. Our life stages approach will automatically adjust your risk exposure as you get closer to retirement, something that Elaine will explain in a little more detail. Shane will also illustrate the perils of making rash decisions and exiting your super investments in times of market volatility. So let's now take a look at the 3 key aspects of our long-term investment strategy. Firstly, our primary objective is to more closely align our ongoing strategic asset allocation to the changing requirements of our members. And a priority of mine since joining AMP has been to better understand our member base. Our life stages approach inherently factors in one of the core determinants of your risk appetite, which is age. However, other factors such as work routines, life choices, income, and gender are also critically important to informing how we allocate investments across growth and defensive asset classes. For example, time taken out of the workforce for parental care will likely impact super contributions and your balance at retirement. Strengthening this understanding of our members is an ongoing and long-term priority. For example, our recent review has identified opportunities to shift a higher proportion of our asset allocation to growth assets such as shares, infrastructure, and property, something we are now considering. In making any change to asset allocation of this nature, we will always carefully assess and manage the risks for our members. But I see real opportunity to enhance the long-term retirement outcomes for our members by continuing to enhance our strong understanding of your ongoing circumstances. Secondly, we believe there is an increasingly high correlation between strong long-term returns and responsible investment. As a large investor, we have an important role to play in creating a sustainable and equitable future for our members and the community. We believe this will also enhance returns for members over the long term. It's why environmental, social and governance factors, or ESG factors, are given careful consideration in our long-term investment approach. The challenges we've experienced as a society over the past couple of years have only reinforced our belief that the prioritisation of ESG issues is more important than ever for members. As such, we have a responsible investment and ESG framework in place, which we'll continue to review and update. This framework dictates, for example, that in some circumstances, we will not invest your funds in companies or sectors where there are questionable ethical and humanitarian principles. This occurs across our internally managed funds and where we can instruct external investment managers through our mandates. The manufacturers of tobacco, electronic cigarettes, cluster munitions, landmines, and biological and chemical weapons do not align with our principles, and we exclude them from investment. Climate change is also an issue which is increasingly important in our investment process. AMP continues to have significant involvement with Climate Action 100+, an investor-led initiative initially formed to ensure that the world's 100 largest corporate emitters of greenhouse gases take the necessary action on climate change. We also take climate change action across our own operations as a company, and we have been carbon neutral across our offices since 2013. We seek to influence the businesses and companies in which we invest, holding them accountable to best practice ESG standards. Through our shareholdings, we vote on resolutions and engage with companies on specific ESG-related matters. During 2021, our managers voted at more than 5,500 meetings across 58 countries and including more than 670 shareholder proposals. Our third long-term priority is to focus on continual improvement and finding new opportunities to optimise your investments so you get the right balance of growth and risk management throughout your lifetime. I believe one of AMP's key differentiators as a superannuation provider is how we work with a broad cross-section of Australia's and the world's leading investment managers. We handpick the best managers across each asset class to manage your funds, and we use our scale to ensure their services are delivered in a highly cost-effective way, helping to ensure low fees. One of the great benefits of accessing a diverse group of managers is that we stay at the forefront of best investment management practice. For example, in recent years, we've seen significant advances in how fund managers use technology to optimise investment allocation. Many are now using artificial intelligence to analyse sentiment from investment research firms and to identify clusters of global companies where there is strong positive or indeed negative performance momentum. Data is also increasingly being used to inform investment decisions. Reviewing our investment managers is an ongoing process, and we will ensure they remain at the cutting edge of investment techniques and technology, providing the best possible outcomes for you. So that concludes my presentation, and I hope this insight into our strategy provides you with confidence that your superannuation savings are in good hands. I'll now hand over to Elaine. Elaine runs our super and retirement business. She's been with AMP for over 9 years and is the most passionate client advocate and hard-working caretaker of your money that I've come across. Elaine, over to you.
Thank you, Anna. A very warm welcome to all our members who've joined today's meeting. As Tony mentioned, I'm responsible for the AMP Superannuation Fund. Our team's sole objective is to help you live your best possible life through retirement and, importantly, give you the peace of mind that comes with feeling in control of planning for your retirement. Our members tell us what is most important to them when selecting or remaining in AMP Super. Strong investment returns, low fees, and easy access to help and advice. Today I'll talk to how we deliver against these outcomes for our members. So let's start with investment returns. As Anna covered already, during the last financial year, we delivered excellent returns for members in our MySuper Life Stages investment options. AMP MySuper Life Stages is our default offer. It groups members by their decades of birth into age-based investment options, and we think our Life Stages approach best supports these members in saving for retirement. And let me explain why. You can see on this graphic that we automatically change your asset allocation, reducing your allocation to growth options as you move closer to retirement. Remembering that superannuation is a long-term investment, so our younger members can afford to take on more risk through their higher exposure to growth assets like shares, property, and infrastructure. But for our older members, being closer to retirement, we help protect their super balance against market downturns through lower exposure to growth assets. This table shows the investment returns across each of our life stages options as at 30 June 2021. Our younger members, those born in the 1990s, 80s and 70s, have achieved returns as high as 23.8%. And our members closer to retirement, 1960s, 50s and capital stable, whilst protecting their super balances against market volatility, still achieved returns as high as 11.9%. So not only do these returns show that we've delivered excellent returns for members, but also that the life stages approach is working exactly as intended. This strong performance also helped ensure our MySuper funds passed APRA's first industry-wide annual performance test last year. Our objective is to deliver consistently strong, risk-managed returns for all age groups. And now to the second item, low fees. Critical to delivering good returns for members is also having low competitive fees. Tony talked earlier about the significant work we've undertaken to transform our superannuation business, simplifying our products from 11 to 3 and our streamlined investment menu. A more simplified business reduces the cost to serve, which enabled us to pass benefits back to members and fee reductions. And specifically, we reduced MySuper fees by 8% on average, this on top of fee reductions in 2020 and 2018, and we reduced our choice product fees by 29% on average. The outcome of these fee reductions is that we are highly competitive against the market, and ensuring we remain highly competitive is a priority. And the last topic, easy access to help and advice. This is the cornerstone of our service approach to you. We know that members who are more engaged with their super will generally achieve better retirement outcomes, so it's imperative we provide services, help and advice that encourage you to engage with us. So let's start with a short video explaining some of the services we provide.
Experience has told us that our members who are actively involved with their super achieve better retirement outcomes. It's this principle which underpins the range of services we offer through our Master Trust super products. Our aim is to provide you with peace of mind that your retirement planning is on track. Whether you already have a good understanding of your super and are looking for ways to maximise your retirement benefits, or you want to build your understanding of the basics, our teams are here to help. Our intra-fund advice team is available at no additional cost to provide simple super advice and retirement health checks. This includes dedicated specialists who can help you better understand your retirement needs, choosing the right investment options, and how to make a comfortable transition into life after work. Our member engagement team is on hand to provide one-on-one super health checks. We make it easy for you by providing virtual sessions which you can conduct in your workplace or the comfort of your home at a time convenient for you. As we've improved our access to one-on-one engagement via remote as well as face-to-face meetings, we're also delivering more virtual educational seminars, covering a range of topics important to your general financial well-being beyond super. We also share the knowledge of our experts through our online education hub, updated regularly with timely information and freely available, while our Simplifying Investing podcast breaks down the topics most important to your retirement and wealth planning. As a member of the AMP Super Fund, we're providing you with the help you need to take control of your financial futures.
You'll have seen from the video one of our main objectives is to help members better understand their superannuation. Last year, we saw a 200% increase in people accessing our free online educational and financial wellness resources. We hosted over 2,300 virtual education seminars or one-on-one sessions with members through our member engagement team. And in particular, the super health checks our coaches provide at no additional cost are highly valued by members. You can see some of the feedback we receive from members on screen now. you can book a one-on-one super health check with our coaches by visiting the URL at the bottom right of the screen. Recognising the rising popularity of podcasts, we launched a new podcast series called Simplifying Investing. It's designed to educate members by providing in-depth interviews with AMP's experts in superannuation, investing and retirement. Now on to advice. More of our members are also taking advantage of our free phone-based intra-fund advice service. This is available 5 days a week to every member of our AMP superannuation fund. 9 out of 10 members who use this service said they felt more informed about their superannuation after the call. We also launched a retirement health check and transition to retirement advice service last year. These services are delivered by a team of retirement specialists, and they provide members with the knowledge to make confident decisions about their retirement. The phone number to organise your check-in with our specialists is on the screen now, and I would strongly encourage you to sign up and take advantage of this important service. I stress that these services are at no additional cost to you, so please get in touch with us. We'll continue to invest in these services which we know you value, helping you make the most of your superannuation. And a few words on insurance. Providing quality insurance cover that appropriately preserves account balances remains an important aspect of our super offer. We'll continue to review and test the market to ensure we offer insurance which benefits members. So in summary, I've spoken to you today about our focus on delivering strong investment returns, providing low fees, and making our services more accessible through easy access to help and advice. We remain committed to these objectives. Thank you for the trust you place in us as stewards of your superannuation. I can assure you it's a privilege and responsibility my team and I take very seriously every day. I'll now hand over to Edwina Maloney. Edwina is responsible for our WRAP platform, which provides solutions for our members who typically have a relationship with an advisor. Edwina, over to you.
Thank you, Elaine. It's great to have the opportunity to talk to our members. As Tony has mentioned, our Wealth Personal Superannuation and Pension Fund offers various super and pension plans to our members, including our flagship WRAP platform North, which houses our well-known My North products. Most members access the products via their advisor. This is distinct from our AMP superannuation fund, which Elaine just discussed. Before I get started, I'd like to play you a short video which provides an overview of the benefits of using a WRAP platform such as North.
The North platform is designed to help its more than 230,000 members with their investment needs through all their life stages, before and after retirement. Working with their financial advisor, members can build personalised portfolios accessing a growing range of managed portfolios, managed funds, Australian equities, listed securities, cash, fixed income and term deposits. The range includes active and passive investments options and an ever-expanding list of socially responsible or ESG investments. Investments are delivered efficiently and at a low cost, taking advantage of North's scale as one of the largest platforms in the market. North also provides access to purpose-built retirement products, including the My North guarantees, which can safeguard retirement savings from market falls and help grow wealth when markets rise, with options to lock in gains annually. The platform's functionality provides members and their advisors with clear oversight and efficient management of their investments. Features such as daily reporting, simultaneous buying and selling, fast-track withdrawal of funds, and same-day transfer from super to pension can reduce investment costs and tax and create transparency of investments. Its fees are among the most competitive in Australia, allowing members and families to benefit from lower fees by aggregating all their accounts and ensuring their fees are capped. Our ongoing investment in North will continue, making sure it delivers everything members need to feel in complete control of their retirement planning.
We're continuing to invest and strengthen the platform in the areas which we know you and your advisors value most. That is providing diverse investment choice, ensuring highly competitive fees, and focusing on providing members with increased financial confidence in retirement. Let's first look at investment choice. North provides access to more than 700 investment options across all asset classes and fund structures. Our aim is to provide flexibility and choice to members who make active decisions about how they invest, predominantly with the support of an advisor. Our MyNorth super and pension plans give members access to a range of investments via a core, select and choice menu. As you will have seen in the video, these menus offer a variety of investment options. Together with their advisors, members can select a portfolio of assets that suit their needs and objectives based on their risk appetite. You're able to build your portfolio through a wide range of investment options, and we're committed to broadening our investment menu, in the past year having added more than 140 options. Each of these investments is carefully screened by the trustee and reviewed for quality. They are also intentionally diverse, providing choice to members who will have differing investment objectives and risk appetites. And they reflect emerging investment trends and the evolving needs of our members. As Anna mentioned, one area of growing importance and where there is a groundswell of interest is responsible investing. To provide some context, the number of Google searches for the word ESG in relation to the finance sector has increased more than tenfold in the past 5 years. According to Investment Trends, 3 in 4 investors either already consider ESG factors when investing or intend to start doing so. We are also increasing responsible and ESG investment choices for our members, including low carbon, sustainability themed and impact investment options. We added 23 new ESG integrated strategies to the menu in November, with more than 80 ESG options now available on the menu. Another investment type where we're seeing really strong growth in member demand is managed portfolios. Total funds under management across the managed portfolio industry in Australia is now more than 111 billion as at 30 June 2021, up from 80 billion in 2019. Managed portfolios are one of the fastest growing investment vehicles in Australia because they provide members with access to leading investment managers and portfolio construction at wholesale pricing with more efficient tax outcomes. Last year, we launched our new equity managed portfolios, while both our Index Plus and MyNorth sustainable managed portfolios received 4-star superior investment ratings from research firm SQM Research. Strong validation of investment quality and the latter's ESG credentials. As we continue to strengthen North's investment range, one of our central priorities is to ensure the platform competes strongly on price. We've made significant reductions to our platform fees in recent years, including reducing administration fees by up to 22% last year. We've also reduced brokerage fees on those same products from 1 July 2021. These reductions are providing significant savings for our super and pension members. One third area of focus is to help our members better manage their retirement savings. It is a critical issue for many members, particularly with sustained low interest rates impacting retirement income streams. We know from the government's retirement income review that many Australians sadly pass away with approximately 90% of the assets they had at the time of retirement. This is because they don't have the confidence to spend their hard-earned retirement savings for fear of running out. This fear emanates from uncertainty about the future, including how investment markets will perform, and also uncertainty around unplanned living expenses and life expectancy. Our My North guarantees are designed to help members transition to retirement and deliver a stable, risk-managed income stream in retirement. But we're working to further strengthen our retirement solutions for members. We want to provide you with increasingly simple retirement products, which allow you to spend your savings at a high rate of income with complete confidence that you won't run out of money. This translates into better quality of life. We'll be looking to provide an update on these offers later this year. I'll now hand over to Shane. As AMP's long-standing chief economist, Shane is one of Australia's most respected minds and voices on investment markets and the local and global economy. He's witnessed many investment cycles and major market events over his career, and his knowledge, experience and deep perspective plays a key role in the development of our long-term investment strategy for your super. Over to you, Shane.
Thanks, Edwina, and thanks for joining in today. As we've heard, the last 12 months, or 2021, saw very strong returns for superannuation funds. The typical balanced growth superannuation fund returned something like 14%, which is well above its longer term average. And often after strong years, you get a softer year the next year, which indeed is what we expect to occur this year. This next chart summarises my key views on things. I see global growth continuing. It's going to be a bit slower than it was last year. The easy gains are behind us, but global growth will continue. One big issue, though, is the pickup in inflation. We've seen it spike all around the world, particularly in the US. It's gone to a 40-year high. Largely, it's due to the impact of the pandemic. We've had to spend more on goods because we couldn't spend on services. And at the same time, people couldn't get to work. There's been disruptions in production, and that's constrained supply. Consequently, prices have gone up, inflation's picked up. So hopefully, as the pandemic recedes, we should start to see some of those price pressures start to recede this year as well. But in the meantime, central banks are under pressure. They're thinking, well, if we don't do something now, then these inflation pressures could become permanent. So consequently, we are starting to see rate hikes. We expect the Reserve Bank, the Federal Reserve in the US to start raising rates in March, and the Reserve Bank in Australia to start raising rates in August, but possibly as early as June, depending on how the run of inflation and wages data goes over the next few months. What does all that mean for share markets? It means share markets can keep going because global growth is still good, profits are still rising, but they'll be more constrained and more volatile as interest rates rise. If we look at coronavirus, bad news is the number of cases has surged over the last few months in response to the Omicron variant. The good news is that surge globally and in Australia seems to be rolling over. And the very good news is that the number of hospitalisations, people in ICU, and people dying from coronavirus relative to the number of cases is well below where it was in the previous waves, which tells us that the vaccines are helping, new treatments are helping, and obviously, as we've heard, Omicron is less harmful than the previous variants. So if that remains the case, and there's good reason to expect that it will, then there's a good chance that coronavirus will start to become endemic as opposed to being pandemic, and the global recovery and reopening can continue. What's our summary view on the major asset classes? Cash, pretty low returns. Maybe a bit of a pickup in bank deposit rates later this year as the Reserve Bank hikes, but still pretty low returns coming out of that asset class. Government bonds, probably going to see another year of negative returns because we've still got low yields and bond yields are actually rising a bit, which causes capital losses. Share markets, trend remains up, I think, but it's going to be more constrained and more volatile, as I've mentioned. Residential property, we've had a great run higher. That might continue for a little bit longer, but the combination of poor affordability and rising rates, I think ultimately we'll see prices peak later this year and decline a little bit into next year. Unlisted commercial property and infrastructure, probably doing okay, but there will be some constraint in the office space and the retail space of those asset classes for the simple reason we've still got more people working at home and more people spending online. Finally, the Aussie dollar. We see the Aussie dollar bit messy lately, but it probably will still rise over the next 12 months as commodity prices rise. Now, I want to talk a little bit about superannuation as an investment. It really has to be seen as long-term. Growth assets like shares and property and infrastructure provide superior returns over the long term as they leverage to economic growth in the economy. But of course, the price we pay for those higher returns relative to, say, cash, is that you get more volatility. And so every so often you get these wobbly patches like we've seen so far at the start of this year. But you've really got to stay the course through that short-term volatility. Members trying to time short-term moves invariably run into difficulty because you often find you get out at the bottom or after a big fall and you only get back in after there's been a big rise. So in effect, you end up destroying value or reducing your retirement savings as a result of trying to time markets, which is very, very difficult. Now, there's 6 key themes I'd like to cover that will influence superannuation returns and the way we invest over the next 5 to 10 years. So I'm looking here at the medium term. The first one is technology. This always has a huge impact. But the reality is that every so often it gets a spurt along. Obviously, there's been huge advances in technology over the last few decades, but the pandemic has really shown a way to use some of that stuff in a way that adds to productivity. If you think about it, more people working at home, less demand for office space, which is a bit of a drag. But by the same token, it means lower costs for businesses. It potentially means less need for international travel, all of which slows or reduces the costs that business face and actually adds to productivity. We've also found that people working at home actually adds to productivity. They're more creative, they're less interrupted. So the pandemic itself perhaps has shown a way to make better use of technology. I think the same goes for online retailing. Moving on to the next theme, the continuing rise of Asia. This has been an issue now for the last 20 or 30 years, but it's really gathering pace. You can see in this chart here, Asia's share of global GDP, it fell significantly into about 1980, and I've got data here going back to 1700, but recently it's really been rebounding. In 1980, it was below 20%, it's now above 30%, and by 2050, it's likely to be above half of global economic activity. That means you have to have more and more exposure to Asian equity markets, to Asian asset classes to get exposure to that growth and benefit your investment returns. There's another big theme here, climate change, ESG. You often hear the terms ESG, environmental, social governance. This has been a focus, I guess, for the last 20 years now, but it's really coming to the fore now in terms of the way we have to invest and the way we want to invest members' money. Climate change is probably the big one in all of that. Over the last 20 years or so, there's more and more evidence that the world economy, or the world rather, is actually warming up. You can see there the rising trend in global temperatures. Yes, we have setbacks. The last summer has been a bit cooler in Sydney. It's been a lot wetter, for example. It may have been the same if you're in Brisbane or Melbourne. So that's been good because we've had La Nina. But you can also see the cycles there. Every so often the trend goes back up again and the broader trend resumes. I don't really want to see those bushfires return, but I know that that risk is certainly there as the world gets warmer. And obviously there's pressure on to decarbonise. And obviously we have to assess the investments we undertake to make sure that we're not exposed excessively to climate change risk and the global effort to decarbonise. So that's a critically important theme, which also impacts the next one, which is increasing commodity prices. This chart goes way back to 1900. You can see here a chart of global commodity prices. Every so often they have a spurt higher, then it slows off a little bit, then another spurt higher. I reckon we're into another spurt higher. Several reasons for that. We haven't seen a lot of supply. There hasn't been a lot of exploration for new commodity supply in recent years after the last mining boom, which ended about a decade or so ago now. Decarbonisation is driving increasing demand for metals. You think about a typical electric car, it uses something like 6 times the amount of copper that an internal combustion engine car uses. So more demand for metals. And geopolitical tensions are putting upwards pressure on energy prices. So this suggests to me that commodity prices are now into a secular upswing. That, of course, is a positive for Australian assets generally because we've got an exposure to that. And I think that will largely offset the negative impact on coal. But it also means that when we invest globally, we have to take account of this increasing demand for commodities. Some negatives. We're probably seeing the end of disinflation. The last 40 years have seen a big decline in inflation rates around the world. That led to a big decline in interest rates. That's provided a tailwind for investments like shares and property. The likelihood is, for the reasons I've listed there, and I won't go through all of them, the likelihood is that that long-term downtrend in inflation is now coming to an end. We're seeing more central banks more focused on full employment as opposed to keeping inflation down. We're seeing an end to global, or a reversal of globalisation to some degree. So those sort of things are going to put upwards pressure on inflation over the next 5 to 10 years beyond this sort of short-term spike we're currently seeing, which I think will start to settle down a little bit later this year. But the broad trend is likely to be up, which means that long-term tailwind of falling interest rates helping investments is probably behind us, which is a reason to expect more constrained returns going forward. And just finally, geopolitical tensions. We hear a lot about this one. Obviously, Russia with Ukraine, tensions between China and the US and so on. This is becoming more of a factor and does contribute to volatility. So I might just summarise all of that and pull it together. But before I do that, I just wanted to point out that it's really important to see superannuation as a long-term investment. This chart shows the Australian share market back to 1900. You can see multiple crises along the way. We've recently had a bit of a 10% setback going into late January, then a bit of a rebound, but volatility remains quite high. So it's quite normal to get those periods of volatility. The benefit of shares and other growth assets comes from the long-term returns they provide. You have to look through that wall of worry. So to bring all of this together, 2022 should see okay returns, reasonable returns from investments, but a little bit more constrained and a bit more volatile. There's a bunch of themes that I've gone through which will drive returns in the way we invest over the next 5 to 10 years. But a key point is that superannuation has to be seen as a long-term investment, and it's really critical to try and stay the course. Thank you, and I hope that was of value. And back to you, Tony.
Thank you, Shane. Having now heard from AMP's leaders, I wanted to close by summarising our 4 most important areas of focus for your funds in the coming year. First of those is continued strong governance and effectiveness as an autonomous trustee board. Second is continuing to deliver strong, sustainable long-term returns to members. The third is further enhancing our focus on ESG. And finally, fourth is the launch of a unique retirement solution, helping our members retire better. Like we have at this meeting, we look forward to providing an update on our progress on each of these priorities at next year's meeting. I might also add that it's a pleasure to work with people of such high calibre, such as Elaine, Edwina, Anna, Shane and Scott. Collectively, we are deeply committed to delivering on each of these priorities, and we will continue to put members' best financial interests at the forefront of everything we do. I'll now hand back to Steve to commence the Q&A part of the meeting.